number one source, Sports Card Nation. The hobby is the people. Sports Card Nation.
What is up, everybody? Welcome to episode 358, Sports Card Nation. Frank, Sportscard CPA, he's back. Part 2 of our conversation from last week. This gentleman probably has the greatest Hall of Fame baseball autograph collection, has over 300 of the 350 inductees. We're going to, but like his name entails, CPA, right? He's a certified public accountant. A lot of today's convo, not all of it, but a good percentage of today's convo is going to pertain to taxes and things you can do as a seller and buyer even. So you don't have, this isn't just for dealers, but we're going to cover a lot of the, what you can write off, what you can claim, tips, tricks, stuff to keep you out of hopefully trouble. And that sort of thing. And regardless of whether you're a seller or not, I think you'll find the conversation interesting nonetheless. So with that being said, let's get the show started. Here is the conclusion of our great conversation with Frank, the Sports Card CPA. And on this, we're going to start out here talking about some tax stuff and tips and tricks, and it doesn't matter whether you have a sales tax number or whatnot. We're going to just kind of carve up a little bit about what you can and can't do legally. Very informative, and I've been doing it for a long time, and I learned a few things as much as I thought I knew. So I think you'll find it very interesting. So here we go. You call yourself, Sports Card CPA. Obviously, you're not just the CPA on the sports side of things, but you do that. How different is it, being a certified public accountant just in general? How different it is when you're doing like something for a dealer, whether it's someone who does it full time as their livelihood, or even a weekend warrior like myself that just does it as a supplementary income.
Well, I mean, I don't want to get too lost in the weeds with viewers. So it depends a little bit different. These full-time dealers that do it, they can establish themselves as a company and have to file a separate company tax return. Whereas, John, people like yourself as a weekend warrior, you're probably a sole proprietor. Without getting too into, like I said, in the weeds, you probably have to file your information on a Schedule C. But if I can back up just a few years to 2020, I'll give you a quick background. Mike Moynihan and Ty Wilson of Chasing Cardboard. In 2020, obviously, we had the sports card boom. And so all these collectors turned into dealers, whereas they would buy sports cards and they were flipping them very quickly. And all of a sudden, they got something called the 1099 and they didn't know what to do. And so they brought me on their channel and just to talk about like what to do with these 1099s. And we call this the hobby. But the truth is, and this is not a bad thing, I understand this. And these are like even little kids now who are some of my clients. If you're selling more than $600 a year, really, if you're selling anything for that matter, it's a business. It's no longer a hobby. Even if you're taking something, if you're opening or breaking cards and packs, pulling stuff out for yourself, as long as you're turning around and reselling, you're operating a business. And of course, the government wants, doesn't mean they're going to get, but they want some of the taxes on your profits. Yeah, no doubt. And I know, like, I have dealer friends of mine who do their own taxes. I use a guy that I've used. He doesn't specialize in sports cards, but he's done my taxes here locally for 30 plus years. I say mine, but my wife's, and we file jointly. And then, like you said, the Schedule C. So he's done it for a long time. I'm comfortable with him. And to my dealer friends who do it themselves, I'm like, man, it's so like you don't know all the rules. You could be, and that's a two-way street. I think you'll agree with me too. They may not be writing something off that they could, or they may be writing something off that they can't and get themselves in trouble. So I always tell them, like, buck up and just have someone who this is what they do for a living and knows the landscape and the rules, which can change every year and usually do.
I mean, would you agree with that? That advice?
I mean, without
Uh,
getting too political, usually the tax laws change whenever there's a new administration in office. Well,
yeah,
and I'll leave it at that. So Biden being the exception, let's say he wasn't in that long and there was COVID, but like when Trump came into office originally, this is not pro or anti-Trump. I'm just saying facts here. The tax laws changed tremendously, especially for individuals like yourself, the weekend warriors that file schedules in terms of what became deductible, what's not deductible. And what blows my mind every year, let's say come January, February, I'm sure we all read the blowout forums. There's like a CPA, like tax advice blowout forum, and everyone's an armchair accountant and they think they know the answer to everything. And everyone has differing opinions of what you can deduct, what you can't deduct. And I would tell everyone, John, yourself, full-time dealers, anyone that plans on filing a tax return related to the sports card industry, buying is kind of tougher, like if you're a hobbyist like me, but if you sold anything, like we're in October now, even though the weather says differently, this is the time to start planning for year end. Because once the books close, once January 1st
yeah,
arrives, your numbers are pretty much locked in stone. You have the opportunity right now to work with your accountant. And again, we've had a good year in the sports card industry. I pay attention, even though I don't collect sports cards much anymore, I pay attention to the hobby tremendously to help my clients. And so this year was a pretty good year. I mean, and so now is the time to tax plan for the end of the year, because the goal is to give Uncle Sam obviously nothing.
yeah. That is the goal. That is the goal. I appreciate you saying that because sometimes we don't talk about it, right? And remember, if you're working too, like you're paying the taxes. You want to either not get anything back, because if you get it back, and usually I do, so I'm sort of a hypocrite sort of here. You've let the government hold your money sort of interest free for
Correct.
that time period till you get it back. A couple questions here. We're talking about whether something's a tax write-off or not. I have this debate with my dealer friends. Yeah, like, so I'll go to dinner with some dealer friends after the show. We'll talk about the show, maybe what we bought or sold, and I keep the receipt. They're not crazy,
It doesn't
50
matter.
to
It doesn't
$100,
matter.
maybe. Yeah.
It's all
And so
deductible,
me
John.
and my buddy have a debate about this. He's like, no, we didn't make a business transaction. That's not a write-off.
Absolutely not true. Absolutely not true. I mean, that's like saying when you go to a show, if you don't make any money at the show, you can't write off your expense. So as long as business is being conducted, you're talking business, you're educating. For example, I could go to a conference tomorrow. I'm not making any money at the conference. I'm not networking at this conference, but I'm learning, talking business, 100%. Well, okay, that's deductible. There are limits to meals and entertainment, like 50%, and really entertainment, again, with the Trump administration, it's become much more of a gray area, but meals, 50% deductible. I remember watching a Real Sports, and I talked about this before, and this is right during the boom, and there were dealers going on private planes to the National. Those private planes were 100% deductible because it's a travel expense. Because of COVID, it was fully deductible. Now, granted, if they only made $40,000, they paid $50,000 for the flight. I mean, it doesn't mean they're going to get money back necessarily, but definitely was the. So
All right, I'm gonna next time I talk to
you
him,
mean
I'm
you
gonna
pay,
tell
John?
him.
If you don't pay, you can't deduct it. Okay, you can't have someone
Yeah,
else pay, then you take the receipt.
yeah. No, I'm paying for my
You're
own meal.
paying. You deduct that meal, 50% though. But
Yeah,
yes, you deduct
yeah.
that meal.
All right, thank you. I'm next time I talk to him, I'm gonna say you lost because he's
Yeah.
claiming zero. He's like, when he even jokes, it'd be like, yeah, when you go to prison for tax fraud, I'll come visit you.
No.
So
When you have money on your pocket to pay for the next meal because you got your deductions back and he doesn't, you can brag to him.
yeah. So here's another question. You mentioned, like, you learned the hard way about buying through a
Yeah.
cut auto. Let's say, and we'll use someone else, not you.
Yeah.
Someone else buys an autograph for $10,000,
Yep.
and then it turns out to be a Fugazi.
Yes.
Like, and let me ask it this way: they're a full-time dealer, so this is what
Yes.
they do for their livelihood. They buy this item, and whatever, it could be an autograph, a card. It turns out to be fake, and it's
Let's
10K.
make it more practical, John, for a second. Let's say you go into a
All right, go ahead.
$10,000 break and you get nothing.
Yeah,
You get a 10-cent card, so which is almost the same thing. As long as you're basically disposing that 10-cent card, the whole $10,000 break, the whole $10,000 fake autograph, all of that, assuming you're in the business, you're not a collector like myself and not turning around, is deductible. Now, it's not one for one in the sense that if I buy a $10,000 break or get a $10,000 autograph that's fake, I get to deduct $10,000. So it doesn't work one for one like that, but 100% it's deductible in the year you dispose of it.
It's a loss off.
It is a loss, 100%. And so that's how I deal with more breakers that you probably can imagine. A lot of them you probably heard of. They do their tax returns, and this is why they go into these huge breaks. It's kind of like gambling. Well, it is like gambling. Let's be honest. I'm surprised. I'm almost surprised that the government hasn't gotten more regulated on these breaks.
Do you think that's somewhere coming down the turnpike potentially, or you think they have bigger fish to fry?
I mean, as a CPA, I think they're leaving money on the table. I remember a couple years ago, they changed the 1099 rules. They said they were going to lower it from $20,000 down to $600. So in other words, if you sold more than it used to be if you sold more than $20,000 and 200 transactions, you got a 1099. Then COVID came, they gave money out like water. They said, we got to get some of this money back. So instead of giving $20,000, we're going to lower that $20,000 threshold to $600. And I would literally call the auction houses like, okay, if someone sells from you and you pay them a $20,000 check, are you going to 1099 them? And some would say yes, some would say no. And that would literally determine whether or not you're going to, because that's, let's say, a 1/3. So if you made $20,000, you're paying a third of that to the government versus paying nothing. That's a lot. And that's all on the auction house. That's really, I shouldn't say it's on you. If you got money, every penny you receive is theoretically deductible. But people will claim, oh, I never got a 1099. I didn't know, and play stupid. But again, back to my point, the government recently just increased that $600 this year back to $20,000, which obviously will decrease the amount of taxes they receive. So when it comes back to breaking boxes, to me, it's almost no different than gambling. So if you win something market valued at more than a certain amount of money, I think it should be taxed. This is me as a CPA. Do I think it will happen? I mean, no. I'm sure you read about the IRS just had a huge let go of a tremendous amount of people. I mean, in our industry, we're joking, there's no one left at the IRS except for computers and AI. So, I mean, it would be tough to enforce. I think Facebook Live, whatnot, and all these other apps is still kind of the Wild West. So do I think it should be taxed? Absolutely. Do I think it'll happen it won't happen at least while Trump's president, as Republicans said. Maybe if there's a change in office. That may be one thing on there, because they're leaving millions and millions of dollars on it. And Raz is as well.
Yeah. I'll put you a little bit on the hot seat with a
I love it. Go for it. You're going to get my honest opinion here. I don't sugarcoat anything.
All right. As someone who does taxes for like dealers, what's the number one mistake hobby dealers make when it comes to filing taxes? Or is it as simple as not keeping receipts?
No, I'll tell you what it's simple as. It's as simple as like your friends that say, I can do this on my own. And don't keep accurate inventory. They think there's a misconception in the hobby, and I see this all the time, that, okay, whenever I spend $1, I can deduct $1 in the year I spend it, not in the year I sell it, if that makes any sense at all. So if you buy inventory, let's say in 2025, but you don't sell it into 2026, they think you can deduct that inventory in the year you sell it. We call that cash basis. And the IRS put out some very, very specific rules saying, no, they're only under some very unique circumstances can, like baseball card dealers and stuff like that, ever deduct those expenses in the year in which you buy and not in you sell it.
Yeah. And I know firsthand and personally.
But everyone on blowout forums thinks otherwise. I just want to make clear that. So.
Yeah, I got.
You are listening to the Sportscard Nation podcast. We'll be right back after this break.
For nearly 50 years, Sports Collectors Digest has been the voice of the hobby, bringing you comprehensive coverage of the sports collectible industry. From industry news, auction results, market analysis, and in-depth stories about collectors and their collections, Sports Collectors Digest has everything you need to know about the hobby. SCD is also your leading source for listings of sports collectible dealers, card shops, card shows, and the latest from the industry's top companies. To check out all the latest news or to subscribe to the hobby's oldest magazine, visit sportscollectorsdigest.com or call 1-800-829-5561.
We are back.
Now, you see all these videos, I'm sure you've seen them too, Frank, where people, content creators who are also dealers, they set up the camera at their table,
Yeah.
and you
Oh,
see
yeah, I love
them
that stuff.
buying.
I love
you
it.
see them buying a 5-figure deal from just someone comes up to their table with a Zion case. And again, I'm not there all, in person necessarily to see the deal, but a transaction's made. They spend 10 or 12 grand. They get who knows how many cards, and you don't see any sort of, other than the cash itself, you don't see any sort of, and if it's a cash deal, there's really it's not traceable. How can, if that person is doing taxes, how can that be a business expense without sort of a receipt? Anytime, let me just use myself for an example. Anytime I've bought something high 3 figures or 4 figures from somebody, I always have them sign, even like a piece of paper, the date, pretty much, that I bought so many cards for the amount of, and they sign it with their name, and they print their name. Is that the right way to do it? Well, when a deal happens at a show like that, for tax purposes, what should a dealer be doing? And the seller, for that matter.
Let's get technical. I'm using air quotes in case you're listening. It's technical. Yeah. Technically, anytime you cash trades hands, the buyer is supposed to give the seller a receipt. Like going to the gas station, you buy gas, you get a receipt. I remember going back to the 2021 National, the first National after COVID. This is when that $600 was supposed to come in. And everywhere cash was trading hands. I wanted to buy a $1,000 autograph from an old-time dealer, and I was going to pay him credit card. I will not take your credit card. I will only take cash. And the reason is cash is so hard, to be honest. So the receipts are not taking place. Now, theoretically, John, anytime you sell a card, any dollar, every single dollar per the IRS is taxable. Every single time you sell a card. Now, are you keeping track of that? I don't know. The odds of you getting audited just without any background, assuming you're not a zillionaire, is about 0.02%. And when they do audit you, they're not going to audit your entire 1040, 1120, whatever form. They're going to audit a single line item in there. So if push came to shove, you filed your gross receipt, Schedule C, a total gross receipt, and they would say, okay, prove to me you made $20,000 and you had them sign something. That may suffice. But the odds of that happening, I got to be honest, are closer to zero. There's better odds, honestly, of, let's say, the Tigers winning themselves right now, me being a Tiger fan.
Well, listen,
very low.
Not to make it a sports show, AJ Hinch is one heck of a manager, so
at
seems
times
to get the most.
At times. So, all
right. So,
again, like I was going to say, so theoretically, every time you sell a car, you get $1, you should be taxed on that $1.
Yeah.
At your tax rate.
What about, though, the scenario that I meant? Like, someone comes up to my table and I buy something or multiple.
Yeah, so the person you sold
and I give them $1,800.
So theoretically, the onus is on the person that got the cash to report the cash. Now, again, cash is very tough. But again, theoretically, it's on them, not on you.
But can I claim, and when I say claim, can I say that $1,800 is a business expense without the receipt, without them signing?
Well, absolutely, because it is a business expense. I mean, the receipt proves it, but regardless, your inventory went up, assuming the cars were worth $1,800. Let's say,
Well, chances are it's probably more if I paid $1,800 for the.
Yeah, whatever. So whatever. I mean, I won't get to cost basis right now, but really, yeah, it's $1,800. If you bought one card for $1,800, your inventory will go up $1,800. And let's say you sell that card down the line for $2,000. Again, I'm just picking numbers. You're going to have a gain of $200. Sorry, you're going to have a gross proceed $2,000. You're going to have cost of goods sold of $1,800. You're going to have a profit of $200 before all the convention expenses and everything else like that.
Yeah. And the fact that I didn't get a receipt from the seller, I'm still okay. Like that,
you're
the
fine.
Government can't say, hey, how do we know? How do we know you're not just saying you spent that? We don't.
Theoretically, they can. It'd be really, I mean, you can get that I sold this for you for $1,800. I mean, that's great proof. It's more than, let's say, 99% of my clients. But I mean, it doesn't hurt. I mean, not only that, the other thing is to keep in mind is your inventory, John. And I don't know how you keep track of your selling inventory, but you will need records for yourself. Forget the IRS. I'm sure you
I need records even for insurance.
For insurance. That's a great point also. For insurance, you want to know how much you spent on the card.
Yeah. I always try, this is just me speaking for myself, but I always try, especially of a significant deal, I always try to have the seller, hey, I have like a legal pad that's in my backpack. Hey, I bought these legitimately, and here's how much. Sometimes, most people are pretty good. Yeah, I'll do that for you. Every once in a while, you get someone who probably doesn't want to necessarily claim it on their end too. Like, I don't really want to sign that. I made 1,800.
I'll tell you a quick
that
story. And again, I'm not going to mention names, but I had one person that come to me as a client, and they're like, "Listen, I want you to do my tax returns. I don't want to pay any." I go, "But you made like $35,000. I mean, like this is how taxes work. Like, congratulations, you made money. You're going to pay taxes." He's like, "But I don't want to pay taxes. My friends don't pay taxes. This is why I'm paying you, so I don't have to pay taxes." I mean, I'm happy to bend the envelope, get creative. There's so many deductions out there that individuals don't realize. I'm a real big proponent of not leaving money on it. But I mean, at the end of the day, it's very tough to make 5 figures and then claim nothing to the IRS. And again, I just put a video out. And like you said, you're a full-time dealer, but there's a lot of people probably listening to this that go, you know what? I sell a few cards a year, not significantly. I'm not a weekend warrior. I don't know if this is really a business. And there are rules to determine, okay, is this really a business or a hobby? So that's really important to pay attention to also. And I would say the number one rule, if I had to say one rule over all others, it's this: is the money you are receiving from your sales, are you reinvesting that back into your inventory, back into sports cards? Are you taking that money, pocketing that, and let's say going on vacation? There's other rules also, but that's probably the number one rule if it's a business or a hobby.
Yeah, and I do a little of both, but again, I'm pretty good with keeping good paperwork and good records. I have a buddy of mine who, he's in the teaching profession like I am, but he's also a weekend warrior like I am, and he's always almost spending, if not what he made, or even more so. And there's times I do that sometimes. I guess it depends, what presents itself and different opportunities to buy some stuff. It makes sense, right? But I like the guy that made the 5 figures and says, "Hey, I don't want to pay taxes."
Yeah, isn't that more American than anything else, not to pay taxes? So
the only thing I say to my guy, and I'm sure you hear this, hey, do your magic, right? Do every write off I can get, and he's good like that. And he asked me a lot of questions. Did you do any donations, the Goodwill, clothes?
Yeah. So I'll be honest, this is how it works with my clients, and I know we're getting close to the end here. So I have an email address, frank@sportscards.cpa, plural sportscards.cpa. I answer any and every question sent to me pretty much for free. I don't charge a penny. I'll give you my personal advice, not my full company advice, but my personal advice, just doing this for 25 plus years on what to do. A lot of times people say, you know what? I want to pay money to avoid aggravation. I don't want to think about it. So that's when we come on, me and my partner or associate, we sit down, we analyze, and a lot of times they've been doing this for a couple of years, and their old accountant, who's I'm sure a very good accountant, knows his taxes. But the sports cards industry, God, I don't say I'm young, but it's a fairly young person game, especially since 2020 and COVID. So, and they're not really paying attention to all the deductions that are sitting out there for the people. Like, John, I'm assuming you're deducting your house, your utilities, your cell phone, your electricity, like all that is deductible.
Travel, you get certain
travel, gas, all that. So I will literally do a Zoom call. It's a flat fee. I Zoom with you, and I need an hour of your time. And this is when I could sit down and go everything, because I find it hard when I send clients a sheet. They're not thinking everything. They see the sheet. They see, okay, rent. I don't have an office. I don't pay rent. But do you have a mortgage? Yeah, you're paying rent. You're paying rent to yourself, but you're paying rent. So like I find that 1 hour with the client very beneficial. And that's when I can really learn the business. And every individual is breaking versus a full-time seller, which is a weekend warrior like yourself. And I've gotten I have stories I can't even share, to be honest. It's so interesting in the last 5 years since COVID. I've seen the guts of the industry and the collectors and what they're doing and how they're making money. It's just fascinating. And now Kevin O'Leary getting in on it. I think it's great from like, if you're a collector, I mean, we're bringing in big time players. And
Have you ever, again, no, you don't have to mention names, and this will be my last question for you.
Sure.
Have you ever, someone wants you to do their taxes, they're in the hobby, whether it be full-time or not full-time, and you just have a sense like they're really, I don't know if shady's the right word, but they're not being truthful. I know like you can do things legally, but they're just not giving you the right information where like you're leery yourself, like I'm putting my name on this, where you've turned them away and say, I'm not going to.
Yeah, I've never turned down even the person that said, I don't want to pay taxes. I was able to talk to this person and convince them that you got to pay something. I'm not the IRS. I don't work for the IRS. I work against the IRS.
Yeah.
I don't audit you. John, if you were to come to me as a client and you gave me numbers, as long as they appear reasonable, I am not here to second guess you. That is not my job. Yeah. And that's the IRS's job. So I sit down with my clients and we work with them, not with the IRS, not with the government. See, okay, this is the most reasonable thing possible. And usually when I sit down and I explain to them what we're doing and why we're doing it, they're pretty reasonable. So if someone came to me and said, for example, that he said, I have no inventory. I sold it all this, even though I looked at his website and there's inventory up the wazoo. I go, listen, I'm not the IRS, but if the IRS were to look at your website here, they're going to say, so let's sit back, let's reevaluate it. And so I'm a pretty relatable guy, I like to think. So I like to work with the clients. I've never said no to a client. I imagine I could turn them away, but I've never turned away a client. I have very good relationships with my clients, and I'm very proud of that.
Yeah, that's cool and good to hear. I just wondered how, how that dynamic.
Listen, I don't want you to pay taxes. I'm not here to work for the government to get paid, but my goal is to pay you at least for all my.
You could work for the IRS if you wanted to be on that side of the.
Yeah. I'd be worried about my job every day, but no. So with Doge.
Well, Frank, thank you for giving your time and being so forthright and a lot of great information right there and like you said, you answer questions for pro bono, but
absolutely. Like I have some of them like do my taxes for me and I'm not going to pay you. That I won't answer. Like yeah, simple tax question. I'm happy to do it. Yeah. I literally during COVID got probably 1,000 emails a year. Yeah, every single one was responded to.
Yeah, well, that tells you what kind of person you are, and
thank you.
Really.
I mean, I'm here to help the hobby, the business, the collector, whatever, the whole thing.
Yeah. No, we appreciate it. Thank you. Before I let you go, as always, the guest gets the final word. Put out there. Say that email again. Website, YouTube.
Frank at sportscards.cpa. I have a YouTube channel as well. Used to be Baseball Hall of Fame autographs. Now it's Sportscard CPA. I talk about the latest tax issues, and I also love talking autographs. I do love the hobby. For me, it's a hobby. I don't sell.
Yeah. And if you think you have something that one of those 50 or so that Frank needs,
Yeah, if you have an extra Christy Mathewson check laying around, please contact me. I'll do your taxes for free, even though I'm legally not allowed.
There you go. It can't beat that deal. It can't be. Free is the best deal you can get. So, well, Frank, I appreciate it, man. This was a blast. We'll have to do it again. We don't have to.
Absolutely. I'll see you in Chicago, hopefully next year.
All right. Yeah, sounds good. Thanks, Frank.
Take care.
Great having Frank on, and I spoke to him afterwards. We're going to have him back on. There's so much stuff that we didn't even get to, and I'm not even talking just tax stuff, but collecting and all sorts of other stuff. So autograph and meeting people in person. So we'll have him back and tackle some of the stuff that we didn't get to on these 2 episodes. So again, that was part 2. If you enjoyed that but didn't hear part 1, go back a week, episode 357, and catch that episode. So with that being said, we're going to hear from our Hobby is the People announcer of the week, and then wrap up to this week's episode.
Time for our Hobby is the People announcer of the week.
Hey, it's Chris Carlin, formerly from Upper Deck, now with Collectors. Remember, the hobby is the people.
If you'd like to be the Hobby is the People announcer of the week, do a WAV or MP3 file and send it to sportscardnationpc@gmail.com.